If a country, decides to retaliate and then the US retaliates more, and the last thing this world needs right now is a global trade war.
Or a little bit of diversification, to your point. Adrian, I got to ask you about China. You just brought it up. I mean, we've seen this aggressive accumulation of gold, buying 44 tons in 2024. At the end of the last year, the bank reported holding 2,280 tons of gold, still accounting for about 5% of its total international reserves. I mean, what does this tell you here? I mean, if you're an investor and you're seeing this, what are you doing now? Is this potentially a move away from the dollar?
Yeah, absolutely. I mean, let's first of all say, if you or I were Chinese in the Politburo, would we be wanting to sit with the majority of our reserves in US dollar at this point in time? I don't think so. We would be wanting to move away from that as rapidly as we could. And that's what's happening. And I think that's just going to continue to happen, frankly. And I don't want to get political here, but when President Trump threatens the BRICS with 100% tariffs, what's the reaction of countries? What's the reaction of Brazil or South Africa or Indonesia, let alone China? Do they say, oh my gosh, Mr. President, we're so sorry, we didn't really mean it. Forget it. We'll sell all that gold and we'll buy the dollar. Of course not. It's the opposite. In my view, it makes them, they might give concessions to the US to try to stave off the inevitable, but they're going to want to move away from a dependence on the dollar just as rapidly as they can, in my view.
And, to your point, I mean, Trump just delayed tariffs on Mexico and Canada, but he's still targeting China, and now he has the EU in his sights. I mean, I got to ask you, is this just posturing here, Adrian? Or are we looking at a full-blown trade war that could really disrupt global markets and supply chains?
Yeah, the answer to that question is yes and yes. Again, I don't want to get too political, and I'm not a political analyst, nor am I a psychologist, but I mean, this is sort of Trump's playbook, right? You threaten the extreme, and then you can come back. And maybe that's good in negotiations, I don't know. But I do think that certainly when you threaten tariffs on your friends, it does cause some resentment, and that resentment is not going to go away. And this is not new with this administration, of course. For the last 20, 30 years, the US, as much as people around the world admire the US, like its music, and I don't know why, but like its music and its movie culture and everything else, there is some underlying resentment that about the US telling other countries how to behave. And that's been going on for a long time. So it's a bit of and I guess that always happens when there's one top dog in the world. I'm sure in the 19th century, not everybody loved old British all the time, right? But you see the way, as an example, the way the US treated the Swiss banks, telling the Swiss banks that they have to run their banking system the way we want you to run our banking system, not the way that you traditionally have run your banking system. And that causes some resentment. And the resentment doesn't go away. That's the concern I have. So in answer to your question, yes, I think there's a lot of posturing here. There's a lot of, again, negotiation, definitely. But these things can fall out of control. They can go out of control if a country, decides to retaliate, and then the US retaliates more. And, the last thing this world needs right now is a global trade war, because we saw what
Oh, and it seems to happen so darn quickly. I mean, let's talk about the stagflation risks here too. And when we're talking about the economy, because we're seeing short-term yields, rise on inflation fears, but long-term yields are falling. Textbook stagflation, warning signs here. So, I mean, you look at what's happening in the EU. So, do you see this as becoming more of a crisis this year while we have this change of power?
Yeah, I think so. I think the US economy was heading in a certain direction regardless of the change of government. So I already mentioned that the CPI PCE for the last 5 months has been in a steady uptrend, small, but an uptrend. And so when you look at a graph, all you see is, well, it's come down from where it was in 2022, isn't inflation under control? But look at what it's doing in the last 5 months or 6 months. It's steadily moving up. If you look at the economy, all the headlines are great. You know, the consumer's still spending. Let's forget about credit card debt and credit card defaults. Job numbers are great. Well, let's forget about the fact that last month the Bureau of Labor Statistics said 256,000 new jobs created, of which 222,000 were private sector jobs. And the APL the day before said there were 122,000 jobs created. So one of the two is wrong. Let's not forget that the Bureau of Labor Statistics continually revises, and more often than not, they revise downwards rather than up. Remember last August, they suddenly said, well, 818,000 jobs that we said were created last year actually didn't exist. So the jobs numbers look good on the surface, but are they that good underneath? Let's not forget that last year, the majority of new jobs, and this is literal, 2023, the majority of new jobs were either part-time or government. That is not a healthy jobs market in my view. So I think these things are all coming to a head. So yes, stagflation, I think, is and for stagflation, we don't have to have runaway inflation. We don't have to have a depression. Stagflation simply means that the economy is growing at a lower rate than the rate of inflation. That's all. And I think we're heading that way. And in the stagflation environment, the best performing asset historically has been gold.
Yeah. Okay. Well, I mean, this gets to my next point. It's so interesting, and we've been reporting on these, magic job numbers just going away before our eyes. It'll be interesting to see whether this new administration will be very, vulnerable and kind of forefront with some of these numbers. And I mean, Adrian, if the Fed is stuck between inflation and recession, obviously it makes gold the best hedge, not just for inflation, but for economic slowdown too. What are your thoughts here?
No, absolutely. Everybody thinks of gold as an inflation hedge. If you asked 100 people in the street, 99 would say gold's an inflation hedge. And that's because of recency bias. In the 1970s, gold was an inflation hedge. But throughout history, gold has acted better in deflations and in inflations. But gold is really a hedge against monetary chaos. And that can be inflation, or it can be deflation, or it can be recession. And in a recession, of course, people go to gold, and the statistics show this up. I don't have them off the top of my head, but in the last, 9 recessions since the 1960s, gold has gone up in about 7 out of 9. So gold has a very good track record of going up during recessions. And the reason gold goes up in recessions is because in a recession, you start to look ahead and say that the central banks are going to have to cut interest rates and ease monetary policy. And that's positive for gold. It's not the recession itself is good for gold. It's the response to a recession is gold. So I think we're definitely heading towards a stagflationary environment, in my view, and that will be positive for gold.
Yeah, I told our audience that you were coming on the show here, Adrian, and they were asking me on X to get your gold outlook. So I have to ask you about prices. I mean, break down short-term targets, long-term targets. I know we got that psychological level of $3,000 gold, but we're damn near there.
We're almost there. It's funny. Just in Vancouver, you mentioned Vancouver 2 weeks ago, someone said, so give me a target for gold this year. Do you think we'll break through 3,000? I said, that's not a very aggressive target right now. Yeah. Oh gosh. To me, the price itself, and I'm not avoiding the question, the price itself is far less important than direction. And the direction to me over 6 months, 6 months, 12 months, 24 months is definitely up. So who was it? Was someone, I forget who, said, if you want to know what the gold price is going to do, tell me what the dollar is going to do. And gold is moving up in the face of a strong dollar. So when the dollar turns, if the dollar turns, then gold could move just dramatically higher in terms of US prices. I don't know. I wouldn't be surprised at all to see, we might get some backwards and forwards at the 3,000 level. We often do. But the way gold is moving right now, I think we could easily just break right through it. And remember, if most of your buyers are non-US people, right, they're looking at gold priced in Australian dollars or Chinese yuan or Japanese yen. They're looking at gold in their own currency terms. And so 3,000 is not a magic number for them. So I wouldn't be at all surprised to see 3,500 to 4,000, that kind of range, within the next 12 months.
Yeah, fascinating. Well, we'll watch for it. I got to ask you before we let you go here. I mean, markets are focused on inflation, the Fed. We're talking about some of these issues with tariffs. But what's the biggest geopolitical or financial risk that investors aren't pricing in here? I mean, there seems to be some underpriced risks right now.
Gosh,
I know.
I wish you'd asked me the thought about it. I mean, I think certainly the high debt levels are something that certain people are beginning to really look at because they're unsustainable. Frankly, they are not just in the U.S. but in certainly in most of the major economies around the world. Debt levels are simply unsustainable. And so that means something's going to break, something's going to change. That certainly is a big risk. Yeah.
Debasement. I wonder what it'll take, when you talk about Trump with these 100% tariffs on BRICS countries and stuff. I wonder who's going to, front run this. Who's going to win?
The problem is with tariffs, nobody wins. Nobody wins. The consumer always loses because the truth is we produce things as individuals and as countries that we have special skills at, and we exchange them for things that other people produce that they have special skills at. And that's what makes that's what makes the global economy grow. So in a trade war, nobody wins.
Yeah, nobody wins. Okay, well, we're going to watch the environment, maybe $3,400, $4,000 gold. Adrian Day is the CEO of Adrian Day Asset Management. Thanks for joining us today, my friend. Appreciate your time.
Thank you very much, Jeremy. It was interesting. It was fun.
Yeah, looking forward to the next one. Thanks, Adrian.